Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar bulls on Friday scrambled for the exit door after rejecting the October highs of 69.40.55. Now, as you can see here, clearly a supply zone. The market rejected this level, ended up by posting a bearish outside range day that now awaits confirmation. From the rejection, the market plummeted from the highs of 69.40 and to an intraday low of 68.63. A huge drop considering how the market's been rallying over the last few days. I would like to see a little bit more confirmation from the technicals, but overall, a break, or should I say a cut of 68.35, which is where I've highlighted here, should be enough to support the bearish case and also keeping an eye on this 60-day moving average. I do feel that 68.35 should trigger the move back to 67.55, which is still the target for this year, and maybe even lower. But first of all, let's see if the market can take out the support at 68.35 to confirm this negative signal. Like the Australian dollar, the market took a stage to the upside for the euro and rejects the 112 figure 15 area. From the rejection, now waits for confirmation to the downside. A break of 110.90 would give us that, and therefore look towards a target of 110.40 or lower, down towards the region that I recently called at 109.50.70. Any advances should fail to the top side. The dollar yen case also stages either a spinning top candle or blow off top. And as you can see from here, the rejection of 109.70 previously as a supply zone now questions whether we're seeing a top for now. I would like a little bit more confirmation from the technicals, but overall, I still feel the market is posted for a negative day for the start of this session. It all began on Friday after the United States and China called their trade conflict after announcing that they had finally agreed to the Phase 1 agreement after 18 months of tit-tat conversation between President Trump and China's tariffs. Still, we'd like to see a little bit more confirmation to what's really going on there as the market slowly digests what was actually agreed upon. There is a few numbers that I have outlined in the report, and let's see if the market is content to see us the top for now. If we do see a further week of play, then I'm looking towards 108.75 and then down to 108.20. The pound, very erratic on Friday with the range you can see here that the market was very volatile on Friday. Now, from the rejection close to 136 after posting a 19-month high is the fact that we could see further weaker play into the start of this session, but I still would like to keep away from any view due to the high risk trade from the volatility that we're seeing here, especially after Friday. So for now, let's see how the market plays out. Looking at gold, there's still a bit of a risk to the upside and see the resistance of 1,476.82 to be contested. It is viewed that we're getting a bit of a rounded bottom here and therefore could see a further play to the upside. It is surprising though that the market was pretty much slightly on the back foot on Friday after the Phase 1 announcement, but it seems to me that the bulls are still hanging around and therefore could see a break to the upside. Above 82 sees 1,500. Any pullback still finds support roughly around the 50 to 58 region. And finishing up with oil, well, we're getting very close to this target of $61 a barrel as the market took another stab to the upside and briefly posted a high of 60.30. Nevertheless, the bulls are still in play, so I do expect to see another round at least to the upside. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the Insta report and hope you enjoy the great start to this new week.